Good evening. I'm Dan Fitzpatrick at StockMarketMentor.com. Got just a quick one here. Twitter. This is one I think you can buy. I think the company's grossly overvalued, but does the market really care what Dan thinks? Answer, no, not really. So neither should you. But here's the deal. There was a lockup a lockup expired on a boatload of shares. And what happened? Stock's up over 1%. I suspect, and I'm not going to take credit for this, although it's easy to deduce. I think it was Pete Nigerian that was saying this morning. He thinks, yeah, it was, that a lot of this selling, not after a crappy number. I mean, they didn't have great numbers, but he thinks that a lot of the selling was by investors who knew about this lockup expiration, and they were anticipating that an increase in liquidity would actually push the stock lower. Well, it didn't do that, and so the first rule of trading, at least the first rule in my book, is that if a stock's supposed to do something and it doesn't, then you need to reassess what it was that you're expecting the stock to do. Typically, it's telling you that you need to go the opposite way. So with Tesla, here's the thing. Right now, okay, we had this gap down here, and since that time, the stock's been gradually filling the gap. If I would say buy the stock now, and rethink it when the stock is in the mid-60s. But I think you're probably going to get more upside on Google. Well, you'll get more upside on Google too, but that's in the strategy session. But with Twitter, as long as the stock just keeps trading along this line, that's really all you really need to know, okay? Now, members, in the strategy session, I'm going through a lot of stuff that's working. There are a lot of stocks that are working, so I want you to get there and, buy and hold. It isn't really a bad thing in this market.